Okay, please settle down, everybody. May I request Mr. Lalit Vij, Managing Director, Principal India, to come on stage. To please be seated. Mr. Tim Hill, Executive Director, Principal US, and Mr. Gaurav Kumar, Managing Director, Asia, Middle East, and Africa, to come and be seated on stage. Friends, can we have a round of applause and welcome our three guests for this afternoon? Thank you so much. Thanks for being part of MFRT and being part of this session. So, friends, we'll be focusing mostly on the, principal, as you all know, is, a global leader in financial services, very large presence across the world. So we would like to focus this session mostly on the international best practices, especially around the practice management area. So we look forward to your insights on that pace. We'll start with the first question. Tim, as I mentioned to you earlier in the morning also, I liked, in the morning session was fantastic. The best part about your session was your last slide, which spoke about being more human. We all have heard about being human, but he spoke about being more human. So Tim, in this world of digital, digital technology, robo-advisors, how do you think financial advisors can actually stand out and, one is compete obviously, but how being a traditional advisor itself can become a competitive advantage in this new world? So what's your views on that?
Thank you. Yeah, I think it's challenging with the push towards digital. That it's easy to get caught up in social media and think that that's the answer. And it's the same in the U.S. as I would believe it is here. Is that people have a desire for an emotional connection, particularly with those people handling their money. And I think one of the important things they talked about, this idea of specialization and making sure it's not always possible, but do you have similar interests to your clients? And becoming an expert. I think for a lot of U.S. advisors, whether it's blog posts or getting information out about what's important to them and how they think about the markets, that communication really helps establish this idea of being more human and not simply allowing, as is typical in financial services. Basically in the U.S., a lot of the advertisements are big buildings and, big old buildings made of brick or concrete. It's not very human. And so what we're trying to do is extend that. And I know, like, as an example, I looked at a lot of videos and things online about India and the awareness program that's being done. That to me is a good example of making a human connection. It's talking about parents and children and that type of thing. So, it's not complicated. Quite frankly, we are human. So it's just a matter of oftentimes letting your guard down. And many people aren't looking for perfect. They're looking for real. So that's what I would share. Yeah, absolutely. Please.
I think in Indian context, I think it's buying a financial product. I'm talking mutual fund only. I think buying a financial product is not easy. And but at the same time, I think we got to acknowledge and see what's happening around us. I think there's more and more proliferation of technology. There's internet, which information is available on real-time basis, and is a perfect world. I think what information is available to you is also available to other people as well. And the young people have a propensity to look for information before they actually take a decision, or before they actually make up their mind what they want to do. So let me compare a traditional old 15 years ago kind of a stuff. The investor has got a desire to buy something or has got money to buy something, will go to somebody which is a trusted advisor. The father dealt with them, or you build some kind of trust, you build some kind of relationship, and will say, I have some money to invest, or I have a need which I need to fulfill in the future. Please tell me what I do. And you typically recommend something based on what the risk appetite of the person is, what you think is the right product. You help do the execution as well, and support them in the follow-through as well. Now today what's changed? I think young people, because of proliferation of internet and because of technology, because of information available, will do their research. Right? So they will research in terms of this is what my need is, and they look at different stuff around there. So we are offering something, Prudential is offering something, BlackRock is offering something. They're competing products outside. they do their research. They're pretty much very clear in terms of what they're looking for and what options are available. And now they come to the advisor because it's like taking a decision is very difficult, and especially, including for finance professional, if you ask me, it's easy for me to figure out what I need to buy. It's not easy. I think when it's your own money, I think it's very, very difficult. They need to go to somebody to validate that as well. And that's when they will definitely come to somebody they trust and there's somebody they have built a relationship with in the past. So I think that kind of, and that's a debate is going on, direct versus robo versus advisors. So role advisors play is always going to be there. It's not going to be right from initiation, but at that time. When the person comes to you, know what changes, right? The person informed. A person know what's going on, and that's where technology has come into play. So you want to push something which you think is right, you will not be able to do it. I think it's more around collaborative. I think I heard somebody talk in the morning in terms of shared needs and sitting on the same side of the investor and trying to figure out what the right product for them is, and recommend a product to them. And then once you recommend it, I think all the stuff which logically flows around commercials and implementation, I think that kind of goes on there. So technology is not something which is going to replace humans. It's not going to replace decision making. I think as a psyche, we like somebody to validate what our thinking is, and especially around financial products, and that's where we play a significant role. But what's going to change is more around they're informed now. And I think it's, we heard so many people talk in the morning as well. Technology is going to play a very effective role in terms of implementation and productivity as well. So that's my take on technology and the human aspect of it. It's not going to replace it. My belief is not going to replace it all.
What is the percentage of mobilization direct advisor and distributor model?
You know what? I think it's an industry which is dominated by distribution, by third-party distribution. The direct and retail, there are different numbers floating about. I think it's anywhere from 8% to 12% that everybody talk about. And that's retail. I think institutional big money, which is liquid and ultra short, may be coming on direct plan as well. They're apparently cheaper. So it's not big, but I think my view is that it's not going to change anything. It's going to be very, very difficult for individuals that have the ability to take decisions. They need to go to somebody. They need to trust someone. And so the kind of quality of interaction we have, I think is probably going to determine what the ratio looks like in the future. I do not expect that to be dramatically different than what it is at the moment in the foreseeable future. So I think as a community, we need to evolve. As a community, we need to evolve and look at technology, look at changes happening around us, look at how the behavior is going to change, and adapt and make sure that we are ready to add value in that new value chain which is out there.
And there also exists dual value of the NAV?
Sorry?
Direct
No, direct is a different NAV. I think it's a different NAV. Yeah. Oh, in US? No, I wouldn't know. I'm an Indian. I work in India, so.
What is the dual NAV is there? The direct plan is the NAV?
So for offshore funds, you're right. There are always a two thing called bid and ask price. So it's without entry load and with entry load. So those options have been there for.
Without entry load also here, but one plan is those can be purchased through distributors.
Yeah. So it depends. Outside in the offshore funds also you can create multiple classes. So we have a direct class and an institutional share class, right? So there is a differentiation, but unlike in India where the regulators does not want it to be paid out, those sort of regulations, at least in the offshore jurisdictions, are not very much strict.
And also, like for our share classes in the U.S., 99% of what's done is done through advisors. Now, a retail individual can go to Charles Schwab, as an example, online and purchase principal funds directly through there. But generally speaking, they're looking to work with an advisor. An exception to that would be Fidelity and Vanguard in particular. Vanguard does a tremendous amount of direct business, billions and billions and billions. But they've become extremely popular. But generally speaking, the model is working with advisors in some way, shape, or form.
Thanks. Gaurav, to you, what are the, since you're based out of Dubai, right? Yeah. So, and you've been traveling across the world. So what are the kind of product preferences or changes in product preferences which, Principal as a group and you as a person, you've been seeing both with advisors as well as the consumers or investors, and also the practice trends, practice management trends?
I think there's one interesting thing that we keep here a lot more is the importance of advice, right? It is not that especially in Asia and Middle East, where it's not just about selling a product, it's also the person who's giving advice and the quality of advice. So a lot more people are open to pay for advice. And the second is people are actually moving down to more often outcome-oriented products, right? So saying that we have a need, can your product meet our need? So my need could be I want a 6% dividend payout or interest income annually, right? So I want products that can give to me. I don't care whether it's a value or a growth, or he's a star fund manager or he's not a star fund manager. I want the outcome to come out. And that change is happening. And I think this is one change obviously which is happening a lot more in Asia and Middle East is the regulatory change, which is pushing investors towards these things, right? They have to, or they're more open to accepting advice, and they're more sort of open towards having products which can meet their outcomes, which are more efficient. So that's two big trends that we think. I mean, there are a lot many things that happen around different markets in Asia, but those two things we think are very strong.
And one of the things for us is along those same lines is a move away from individual strategies. As an example, high yield, emerging market debt, and positioning a particular fund. And we have over 100 billion US in asset allocation portfolios that we manage primarily for pension or retirement plans. And now what we're finding is advisors in the U.S. are looking for our models that we would deliver to them, that they can just basically position the model with their client and wrap it with an advisory fee of usually about 1% that they charge the end client. And so versus you or those advisors picking 12 different funds and putting it together, which is it's kind of fun, particularly if you're inclined for that. But they're looking to have that done so they can spend more time marketing and being human, I guess, and engaging with clients and raising assets and managing their business instead of being a portfolio manager. And that's a big shift, and a lot of that's being driven by the regulatory piece that Gaurav talked about. Emerging market debt or equity. It's quite low. I mean, certainly the equity side's been fairly volatile until recently. It's obviously been more attractive. Less than 10%, 5%, 1%. Yeah, I mean, again, there's a lot of, to the point. I mean, I don't know what the gentleman's name was, talking about the $100 billion pension fund at 1%. Looking to go to 10 at some point in time. I mean, there's I think going to be ample opportunity for increased allocation towards India.
Lalit, you would like to add something?
Yeah, no, I think it's the basic stuff. When I go down to the basics and going back to the Gaurav's comment around outcome-oriented funds or needs of how we fulfill the needs of the customer. So, it's opportunity in India or the market for India for foreign funds is very, very small, right? I think it's probably about 0.25% or so, not even that, about 3,000 crore or 3,500 crore a year. And I think one of the conversations I and Gaurav are having around is an outcome. There are several people out there who have a dollar liability sometime in the future. That's an outcome, right? I want to send my son to US for studies, and I need probably about $100,000 or $200,000 for that. Now that's a need which is sometimes not very clearly stated, and times you can't figure out as to how you fulfill the need. So if you want to bring the money back to India, I think there's a exchange rate risk and that kind of stuff. But however, there are funds outside of India which help diversification, probably give, its dollar depreciation about 3.5% to 4%. Its last year and a half has been really, really good. But usually about 4.5% of what the depreciation is, and combined with a return of about 8-10% on some of the funds outside, you can probably meet the same level of return which the investor expects overall compared to investments in India as well. So I think sometimes the needs are not very clear. Sometimes the products are not very clear. I think once you go deeper into the needs and try and figure out as to what the money is required for, you may be able to figure out very, very different solutions, and which may come from very different providers as well.
All right. Principal as a group is very popular in the retirement category. How big is the business across the world, and how this question? The first part is to both of you, and the second part is Lalit, to you. How big is the retirement piece, and how important is the retirement piece for financial advisors? So if we can put some statistics and insights around the retirement as a financial advisory practice, as a practice area.
I think Tim is a legend in this subject, and he's been a pioneer in selling 401k business. So why don't you start and then perhaps put an Asian perspective to it?
You could have just handed the microphone to me, I think. But, yeah, it's again, the retirement market for the U.S. is obviously very large. I think it's in excess combined all the other retirement markets in the world. So, and that's again, I think, in great part because it's been somewhat necessary. The Social Security system in the U.S. Exists as a bit of a safety net. Everyone participates in that program, but for most of the population, middle class and up, it is not going to be sufficient to meet their retirement needs. So the 401k or payroll deduction plans came into place in 1974. Principal has been present in that really ever since. And for us, that business is probably 200 billion in assets. We do two things. One is we do the plans directly, so the back office and the administration of the plan. And we also, my team does more working with other vendors, AMCs, is that what they call them? So AMCs, again, like Fidelity, John Hancock, JP Morgan, they have 401k platforms as well. And one of the unique things about in the United States is we typically have those be open architecture. So a principal plan will have principal funds in it, but it could just as easily have 2 Vanguard funds, 2 BlackRock funds, whatever, because the company, the business, their employees want that flexibility. They I think rightfully so, look at a single manager plan and say, somebody's getting unjustly enriched. I'm not getting the choice that I would like to have. And so, and that's somewhat unique. I spent time in Hong Kong, and there, again, if you're in their pension scheme, it's a single manager thing. So I do like it a lot. It gives us opportunity, and I think it's better ultimately for the consumer as well. Yeah. Mm-hmm. Yes, we're continuing in India. So yeah, yeah. Well, I mean, again, my observation is I want to come back. So yes, we're going to continue. But no, go ahead.
Yeah, I think it's one is in terms of belief about India and the way the market is growing. And we've been around for several years, about 20 years or so. And I actually moved to asset management company just about 2 years ago. And I've been a principal for about 12 or 13 years. So they came back and told me, and I was running a very successful business and a very large business and with very, very exciting space as well. And they said, we would like you to move to the asset management company. And I did have the same question at that time. Business is very small. Tell me about your commitment. He said, we're moving one of our top executives there. There got to be a reason for us to do that. Right? That's coming from senior management to me. But let me tell you, I think its principle is very, really focused on the emerging markets. So I think Tim probably or Gaurav would probably add to that. About 75% of our business is U.S. domestic, or probably about the same number, yeah. And the rest come from international. And I'm not talking PGI now, I'm talking about other businesses. And all of that international business for mutual fund business coming from the emerging markets. There's a stated strategy for the company. We are not present in mature markets. The entry barriers are huge, and I think the capital required is huge, and break-even is very, very large as well. So we are big in Latin America, we're big in Asia, whether it's China or it's Malaysia or it's Indonesia or it's Singapore or Thailand or India now. Having stated that you want to grow your business from 75% US or 25% international to 50% over a period of time, and 50% of profitability is going to come from international as well. And with a clear strategy going to emerging markets, there's no way you can ignore India. You can't go back to the board, you can't go back to the street and tell them that you've been around for 20 years, you tried to do something, it didn't work out, and you're leaving a market which is a ripe market today. We saw that in this slide. India is the number 2 economy in 2050. And we firmly believe in that, and is absolutely sure that we're going to be around and we're going to be a meaningful player in the country, that's for sure. we'll talk to you separately, sir. Okay. Exchange cards will come to you.
So any other questions from the audience? Yes.
Yeah, I have two quick questions. What are the basically remuneration models outside? Like you said, 1% fees they are charging, and for larger amounts, what they are charging? What is the trend there?
So that you want the range of fees that they're charging?
Basically, what percentage is fee based and what fees they are charging?
Mhm. Yeah, so to date, before the DOL regulations, I would say we were probably 50% commission based, which would be an upfront charge typically that would range as high as maybe 5% on an A share, but annuities were a big part too. Now those were again probably 5% commission up front, but then really no trail compensation that would be basically trading the future for today, and plenty of people did do that. But now with DOL, the rise of advisory, where essentially, probably on the low end, small account, 100,000 US, they'd probably charge 1.25%, 1.5% on an annual basis, down to maybe 75 basis points or slightly lower if it was 2 million, 5 million plus US that being managed. And again, I think within the next 5 years, it will probably be 90% of the total business will be in that type of a structure. So it's just there's too much liability in the U.S. in the system that if you choose to do commission-based, you're going to have to justify why that is a better choice for an investor than doing the fee-based, and it's pretty hard to overcome the commission expenses, even if you believe that there's some reason for it.
All right, one last quick tip, or not tip, a strategy which you'd like to recommend to advisors to keep going and to keep growing.
Please, do you want to finish it?
I think mine is more local context. I think it's the way I see my job is I know principals well, I know principal strengths well, I know what to bring to the table. So my job is to provide a local context and local perspective to that as well and make the company successful. And I think one of the things which I definitely would talk to anybody, whether it's the IFAs or any businesses out there, is continue watching for the trends. And things are changing. I think we heard about India as a nation of savers. I think we save about 30%, 25%, whatever. I think a lot of figures coming out of there. But that's changing. Go and look at the millennia. Go and look at somebody who's just starting at 22, 23, and they're living off loans. They're living off credit cards. They're not a nation of savers. So I think earlier the job was in terms of how do I move it from fixed deposit to mutual funds or different funds. I think today the job is going to go back and convincing for people to save enough as well. And that's where we come in as a retirement company. We believe in long-term saving. That's what our philosophy is. That's what we gear towards. And I think it's what we talk about, and it's a very powerful thing which Dan Houston, our CEO, is a small little note which he keeps on sending out to the people in terms of what's important. And I read one of the notes. He says, and I just try to convert that. He said, if you are able to go to a person who's taken up the first job and earning a salary in India, say, of 20,000 rupees or 25,000 rupees, and if you look at the lifestyle, I think you probably realize that a lot of it is not warranted or not required. What's going to kill us is not inflation. What's going to kill our people or investors is going to be around lifestyle inflation. Got to be very, very careful of it. So I was talking to her daughter. She's just got a job. I said, how much money do you spend in Starbucks? They 500 rupees a week. I said, can I just ask you to stop doing that Starbucks thing and open an SIP of just 500 rupees a week? And at the age of 60, when you retire, how much money does it become? It's about 5.5 crore rupees. I think as simple as that. So I think that's what you need to figure out. You need to figure out what's happening around you. Demographics are changing. People are going to live longer. The governments are not going to support their needs. Interest rates are coming down. So for that segment, we understand well and we service them. But a new segment coming out, what's changing, I think we've got to really capitalize on it and make sure that we're able to get those people in. That 500 rupees SIP is going to become 10,000 rupees SIP in 5 years' time. It's probably going to buy 50,000 SIP over a period of next 15 to 20 years.
Good.
Absolutely, sir. So that's what we can do, educate them.
And all the companies are expecting the 10 times increase of their sale of their
We got to combat that.
Yeah,
Competition is
and,
coming outside as well.
We hold Starbucks in several portfolios, so we need to investigate. So,
Yeah, yeah, correct.
That's an example your daughter understood, so I think this resonated with her.
Yes, there we go. Absolutely, that'll help. I think the one thing I would share, again, going back to this idea of our committed to India, the one benefit that we have at Principal is we have a very, very long tenured leadership team. Dan Houston, who runs the firm now, has been with the firm 32 years. Every senior member of our executive team has been at Principal for at least 20 years. I joined the firm, probably a year after 2007 is when I started, and would be considered to be a relative newcomer at the organization. And so there is, I think probably, execution-wise, probably not where we would like to be in India. We know we've got the right people, and we're committed to it, and we didn't turn tail, sell it, and run just because somebody else jumped into a leadership position. So we're going to be there. I have committed to Gaurav Goyal and Lilith to try and share more information of what we're doing in the U.S., not unlike the time spent here the last day and a half. And again, there's a lot more similarities between what you're doing and what our advisors are doing than I probably had realized. And I think there's some things that we can leverage. Is it everything? Probably not. But together, I think that's something that you guys can discover and figure out by working with us. So.
Yeah, I think India is a great growth story, but I also think it's a time when all of us have to look at diversification and perhaps look at what other investment opportunities could be. And I'll give you my example. I mean, I've been sending money to India from 2006 onwards, right? NRE deposits and things. And the currency at which I send money, and today what it is, I'm actually at loss. I have $0 return, right? So if I had to pay my son's education fees in dollars, I would have made nothing, right? So it is going to take time. It's a beautiful euphoria about India and growth in markets, but it's your fiduciary responsibility to also look at what are the other ways you can diversify their investments and risk from a long-term goal-oriented. And I mean, at Principal, we want to bring those capabilities very much, but again, it's going to take time, but yeah, I think that'd be a great trend.
Great. Thank you so much. Can we have a round of applause for the Principal team, Lalit, Tim, and Gaurav? Thank you so much. May I request the Pune team, Harshvardhan, Ashok, and whoever is there, please come and hand over a token of appreciation to the Principal team. Gaurav, please come. Come. Join us. Yeah. Sorry. Hey. As a speaker. All right. Can we have a round of applause, please? Thank you so much, everybody. Thank you so much for joining us.